Okay, class. Next topic. This time, loans and receivables, long term. Again, our references, same pa rin. The financial instruments standards, PFRS 15 and PFRS 13. Here's the measurement summary. Okay, on initial recognition, trade receivables measured at transaction price as defined in PFRS 15. Others, fair value plus transaction cost. So PFRS 9 requirement. Subsequent to initial recognition, whether that's trade or other receivables, amortized cost using effective interest method. Okay, so based on that summary, number one, which statement is incorrect regarding measurement of receivables? A is a correct statement. Initial measurement of trade receivables, transaction price. B is also correct. So other receivables, fair value plus transaction cost. C is also correct. Subsequent measurement, amortized cost. Incorrect. Delta. The fair value of a long-term loan or receivable that carries no interest can be estimated as, ayun, doon nagkamali. Dapat yan, present value, not future value of all the cash receipts. Okay, so dapat yan, present value. So the cash flows discounted using the market rate. Okay, so 1 delta. In relation to that, okay, refer to the lecture notes. So here's the summary, okay, of the fair value of loans and receivables. Again, for short term, the effect of discounting is normally not material. So that's why for short term trade receivables, hindi na pinapa-disclose ng PFRS 7 yung fair value, okay, ng receivables. So yung face value, yung transaction price, yan na din ang fair value. Now, kung yan ay long term, we cannot ignore the effect of time value. So yung effect of discounting. So we need to consider whether that is interest or non-interest bearing. If interest bearing, we need to consider whether the rate is realistic or unrealistic, at market or not at market rate. So kung realistic yan or at market rate, pag diniscount yung cash flows using that rate, you will get the face value. So yung face value, yung transaction price, yan na din ang kanyang fair value. Kaya lang kung unrealistic yan or not at market rate, we need the cash price. Okay? Kasi yung cash price, yan yung present value of all the cash flows. Kung hindi available yung cash price, kino-compute. How? Get the present value of the cash flows discounted using the prevailing interest rate. If non-interest bearing, same with unrealistic. Cash price if available. If not, compute the cash price. Get the present value of the cash flows. So actually, parang familiar ito, no? Naalala pa ba yan? Na-encounter na natin yan sa PPE. Anong topic sa PPE? Acquisitions. Particular acquisition, installment, deferred payment. Kaya lang that time, ang focus kasi natin, determination of the purchase price of the PPE. Okay? So, and kaninong perspective? Buyer. So this time, dahil receivable yan, lender. Okay? Seller's perspective. So anong ibig sabihin? Yung discussion natin na to sa notes receivable, mag-apply yan also to notes payable. Okay? So kaya pagdating natin sa liabilities, yan, different perspective lang. Pero yung concept, the same. Now, to illustrate yung distinction between short-term and long-term, number 2. Okay, the requirement. The amount to be reported as notes receivable. So, here's the background. On December 31, 2020, BFF, yan, si Rian at si Brian, BFF, yan. Okay, so receive 5 million notes receivable from customers in exchange for consulting services rendered. On both notes, interest is calculated on the outstanding principal balance. Rate 4%. So parehong 5 million yan, parehong interest bearing 4%. So yan ngayon ang issue. Kung yung rate ba na yan ay realistic. Okay? Pero syempre, issue lang yan kapag long term. Kung short term, realistic, unrealistic, non-interest, interest bearing, it doesn't matter. Normally, we ignore the effect of discounting. Now, the note from Rian made under customary trade terms is due on October 1, 2021. So that note is what? Short term. Okay, at dahil short term yan, normally we ignore the effect of discounting. So the note from Rian carried at what? Face value. Okay, so ito yung situation kay Rian. Okay, short term. So yung face value niya, yan na din ang kanyang fair value. So the other note, the note from Brian is due on December 31, 2025. Dahil long term yan, we need to consider the rate. Now, the prevailing rate at that time, 10%. So clearly, yung 4% na stated rate, unrealistic. Okay? So ito naman ang situation kay Brian. Long term, 5 years with unrealistic rate. Dapat cash price ang gagamitin. Kaya lang walang binigay na cash price. So we'll use this one. Present value of cash flows. Discounted using 10%. Okay? So the note receivable from Brian, the cash flows, principal 5 million. So yung interest, payable siya, okay, only at maturity. Kasabay na babayaran ng okay, principal yung interest. So 5 million times 4% times 5 years. So yung principal at yung interest due after 5 years. Total. So anong tawag sa 6 million na yan? Yan yung future value to be collected after 5 years. So ang tanong, yung 6 million na yan, okay, magkano yan today? Okay? So the factor given, this one, 0.62. So the cash flows, the principal and interest to be collected one time, discounted at 10%, 5 periods. So at present value. Okay? So again, yung kay Rian, short term. Kaya yung face value, yun na din ang kanyang present value. Itong kay Brian, long term with unrealistic rate. So kaya kinuha natin yung present value of cash flows. So number 2, Brown. Okay? So the BFF, yan. Rian and Brian. Okay? Next, number 3. That's the definition of amortized cost. Okay, as defined in PFRS 9, amortized cost is the amount at which the financial asset is measured at initial recognition. Then, all of this. So that's the definition of amortized cost. I-convert nga natin yung definition na yan into a formula. Okay, amortized cost of a financial asset is the amount at which it is measured at initial recognition. And what's the measurement initially? Fair value plus transaction cost. So fair value plus transaction cost, that's the initial measurement. Okay, letter A, minus the principal repayments. So kaya kung installment yan, okay, so merong principal repayments. At kung yung payment ay para sa principal and interest, tatanggalin natin yung para sa interest. Ang idideduct lang yung applicable to principal. Okay, that's letter A. Letter B, plus or minus the cumulative amortization using the effective interest method of any difference between the initial amount, ito yung initial, and maturity amount. Now, yung difference between initial and maturity amount, mas kilala natin yan sa tawag na premium and discount. There is discount if the maturity amount is higher than the initial carrying amount. Okay? The opposite is premium. So yung discount and premium na yan, i-amortize yan using effective interest method. Ang objective, on due date, dapat yung CA equal na to maturity. Therefore, to achieve that objective, the discount amortization add to the carrying amount. The premium amortization deduct. So in particular, yung sinasabing plus or minus na yan, that's the discount premium amortization. Okay? Lagyan natin ng note. Up to this point, yan yung tinatawag na gross carrying amount. Take note of this. This is a very important term, yung gross carrying amount. Iba yung gross carrying amount sa tinatawag na amortized cost. So, critical din yung definition na yan pagdating sa pag-compute ng effective interest rate. Okay? So, before adjustment for loss allowance, ang tawag gross. Kaya pag kinonsider yung loss allowance, yan ay yung tinatawag na amortized cost. So, net of the loss allowance. Okay? So, again, kailan gagamitin yung sa measurement na yan subsequently? If the cash flows are SPPI, meaning solely payments of principal and interest. And yung business model held for collection. So meaning yung carrying amount ng financial asset i-recover principally through collection rather than what? Sale or combination of collection and sale. So ito for collection mainly. So held for collection, okay, SPPI, then measured yan subsequently at amortized cost. Okay, so to illustrate computation of the carrying amount. Okay, number 4. The requirement, CA, carrying amount, okay, at December 31, 20. On January 1, 2020, the company sold a machine. Cash price, 900,000. So yung cash price na yan na 900,000, that's the present value of all the cash flows. Terms, 100,000 cash. The balance, 4-year note. The note is installment. 274,565 each starting on December 31, 2020. So yung 274,565 na yan, may kasamang 14% interest. So in this case, wala tayong discount premium. Okay? So kaya pwede rin nating i-convert, okay, yung definition earlier into a formula. into rather amortization schedule. So start from the carrying amount initially. Dahil installment yan, may principal repayment. So wala nga lang discount premium in this case. At dahil wala ding loss allowance, yung gross, yun na rin ang net. So yung gross carrying amount, yun na din ang amortized cost. Okay? So initially, 900,000 minus the down payment, 100,000. Here's the typical amortization schedule. So initial CA. Okay, on December 31, 2020, received 274,565. Composition applicable to interest and principal. So the interest using effective interest method, previous carrying amount times effective rate. So 800,000 times 14% applicable to interest. The difference applicable to principal. So carrying amount initially minus the principal repayments. So CA initially, okay, minus the principal repayments. CA at December 31, 20. Okay, number 4, Bravo. Okay, so using the traditional amortization schedule. Pero actually, pag inanalyze natin yung schedule na yan, yung carrying amount ng receivable na yan, yung 800,000 actually, yan yung present value ng cash flows as of this date, January 1. Kaya itong 637,435 na yan, present value lang din yan ng cash flows. Kaya lang as of December 31. Okay? So take note of this very important concept. Pag na-appreciate mo itong concept na ito, okay, ma-appreciate mo yung accounting for notes receivable. And it will help you, okay, in simplifying a lot of computations. Okay? So take note of this very important concept. If the FA, financial asset, or FL, financial liability, is measured at amortized cost using the effective interest method, the CA, the carrying amount, simply is the present value of cash flows. So yung cash flows discounted using the original effective rate. So by the way kapag measured at amortized cost, yung changes in interest rates, yung changes in fair value, irrelevant. Ignore. Cash flows, i-discount lang using the original effective rate. That's the carrying amount. Kapag ang measurement, amortized cost. At anong ginamit? Effective interest method. Okay? So to illustrate, number 5, that's the requirement. Carrying amount, the amount to be reported as notes receivable. So, ito ang background. On December 30, 2020, the company sold a machine, okay, in exchange for non-interest bearing note. So, long term, 10 payments of 10,000, tapos non-interest bearing. So, ang kailangan natin sana, cash price. Kaya lang hindi given. So tayong magko-compute ng cash price. Kaya lang, ang hinahanap dyan, carrying amount. Yung first payment made already on December 30, 2020. So meaning, kung 10 payments yan, okay, minus mo yung first payment, as of December 31, 20, 9 payments remaining. Okay? At dahil series of equal payments yan, gagamit tayo ng annuity. Okay? Since the next payment is after 1 year, ordinary annuity. Okay? So as of December 31, 2020, the carrying amount, simply present value of the cash flows. Okay? So, as of 12/31/20, 9 payments remaining. So, yung 9 payments na yun, discount at 8%. Okay? 9 periods. So, 10,000 times the factor, this one. So, answer. So, again ha, basta notes and bonds. Yan, ito na yung technique. Basta notes and bonds ang topic. Okay? Tapos ang measurement, amortized cost. So, normally, present value computation lang yan. Pag ang hinanap, carrying amount. Yan. Okay. 6 and 7. Again, bakit ba nagkaroon ng receivable? So, normally, dahil nag-render ng service or okay, the entity sold goods. Yan. So, 6 and 7. Here's the background. Number 6, service revenue. Okay, here's the background. By the way, okay, measurement of revenue, fair value. So, revenue is measured at the fair value of the consideration received or receivable. Okay, on December 31, 2019, the company finished consultation services and accepted in exchange a promissory note. Face value, 300,000. Term, 3 years. Stated rate, 5%. 3 years long term. Okay? Interest bearing. Kaya lang, ang prevailing rate daw that time, 10%. So clearly, 5 is not realistic. Kasi kung realistic yung 5%, magkano revenue? 300,000. Pero dahil unrealistic, ang concept, yung 300,000 na yan, hindi lahat yan okay, principal. May portion dyan applicable actually to interest. Okay? So yung service revenue, present value of the cash flows. So get the present value. Discount the principal and interest at 10%. Okay? So principal. Okay, single cash flow. Kaya present value of 1, 10%, term 3 years. Interest, ordinary annuity. So yung principal, single cash flow lang. Yung interest, series of equal cash flows. The present value of the cash flows, principal and interest. That's the fair value of the consideration receivable. And that's the measurement of revenue. Journal entry. Answer, number 6, letter C. 6, C. Yan. Okay, journal entry for emphasis. Debit notes receivable at face value. So bakit nga naka-receive ng notes receivable? Ng promissory note, nag-render ng service. So, service revenue. The difference between 300,000 and the present value, discount. Discount on notes receivable. Again, anong concept? Dahil masyadong mababa yung 5%, unrealistic, yung 300, hindi lahat yan principal. Ito lang actually yung principal, yung lang present value. So, tapos yung difference, applicable to interest. Initially, yung interest, discount. Tapos, i-amortize over 3 years as interest income. So, additional income over 3 years. Pag pinresent yan, yung discount deduction from notes receivable. So, NR 300,000 less the discount. So, net this one. Kaya ito yung initial measurement. Okay. Number 7. Carrying amount at December 31, 20. So ito, December 31, 19. Paano ma-compute ang CA at December 31, 20? Same lang. Papalitan mo lang ito. Instead na 3 periods, after 1 year, 2 years remaining. So at December 31, 2020, principal. Okay? Interest. So again, dahil December 31, 20 na, okay, 2 years remaining. Okay? So the present value of the cash flows as of December 31, 2020, discounted using the original effective rate, which is the prevailing rate at the time of transaction. So that's the carrying amount. Okay, 7. Bravo. Okay, so again, basta ang topic, notes and bonds. Expect mo na yung discounting. Medyo mathematics. Now, paano naman kung ang gagamitin yung schedule? Sige nga, try nga natin kasi baka mamaya ang ibigay sa atin schedule or pagawin tayo ng schedule. Okay, so tingnan natin kung may difference. Usually may difference yan due to rounding. So let's illustrate. Computation of the carrying amount using the traditional amortization schedule. This is the carrying amount initially. Okay? Effective is 10, nominal is 5. Okay? So, the difference, amortization of discount. Okay, at December 31, 2020, previous CA times effective rate. So, ito yung previous carrying amount. Multiply mo yan ng 10%. That's the effective interest. In case ang requirement ay interest income in 2020, ito yung answer. So, interest income yan, 2020. Nominal interest, face value times nominal rate. So, 300,000 is the face value times 5%. 300,000 times 5%. Nominal interest. Again, ano yung concept? Unrealistic yung 5. Considering na 10% yung prevailing at that time, okay, yung difference, additional interest. So, the discount, amortization. The difference. Okay, gawan nga natin ang entries. At December 31, 20, to record the collection of interest, debit cash, credit interest income. Again, it's not realistic. So, amortization of discount. Debit, discount on notes receivable. Credit, interest income. So, kaya nga yung total income, nominal, and amortization of discount. Yan yung effective interest. And what's the effect of the discount amortization? Increase in carrying amount. Kaya lang, pag kinumpare mo yan sa official answer, may konting difference. That's due to what? Rounding. Yan, may konting difference siya. Now, normally, yung schedule, ginagawa yan to facilitate journal entries. Okay? Pero kung sakali naman, ang requirement lang, carrying amount, huwag ka nang gumawa ng schedule na yan. Mag-discount ka na lang ng cash flows. Especially kung let's say ang term, 20 years. Tapos itanong pa naman sa atin, carrying amount after 10 years. Okay? So, 20 years ang term. Tapos pinapa-compute carrying amount after 10 years. Kung gagawa ka ng schedule, it will take time. Kaya gamitin mo yung shortcut. Present value of cash flows. So ito, present value ng December 31, 19. Ito yung present value at December 31, 20. So yung increase in present value, yan yung discount amortization. Okay? So sa mga susunod ding problems ha, puro na lang tayo. Okay? Shortcut, discount the cash flows. The next two questions. Number 8, gain on sale of equipment. Paano nga normally kino-compute ang gain or loss? Proceeds less the carrying amount. Kaya lang this time, instead na cash, promissory note. So na-encounter na natin yung disposals of PPE. Kaya lang, cash consideration. So paano nga kung promissory note? So here's the background. On January 1, 2020, the company sold equipment carrying amount 800,000. As payment, the buyer gave the company a 1,200,000 note. Rate 5%. Prevailing at that time, January 1, 10%. So clearly yung 5 unrealistic. Okay, by the way, yung 9%, okay, irrelevant yan. Ignore. Okay, so subsequent changes in interest rates, ignore. Okay, so long term with unrealistic rate, installment, 400,000 plus interest on outstanding balance starting December 31, 2020. Okay, so long term with unrealistic rate, get the present value at 10%. For your convenience, the mathematics portion of the solution provided already. So meron ka dyang solution guide. Okay, this one. Every December 31, starting 2020, may principal repayment na 400,000. Yung interest na 5% based on outstanding balance. Kaya itong 60, okay, that's 1.2 million times 5%. Okay, after that, 800 remaining. Kaya 800,000 times 5%. Okay, tapos 400 na lang remaining, kaya 400,000 times 5%. So dahil nagbabago yung interest, okay, so nagbabago yung ating total cash flows. Unequal cash flows. Kaya hindi natin magamitan ng annuity. Kaya ang ginamit, present value of 1 at 10%. 1, 2, 3 periods. After 1 year, 2 years, 3 years. So as of January 1, 2020, at the time of sale, this is the present value of the cash flows. Again, ang concept, unrealistic yung 5. So kaya itong 1.2 na ito, hindi lahat ito actually principal. Ito lang yung principal. So yung difference, additional interest. Okay? So to get the gain on sale, kung realistic sana yung rate, ito ang basis. Kaya lang unrealistic. So we'll use the cash price. The present value of the cash flows. Tapos lagyan ng nota yung difference between 1, 2 and the present value, discount. Additional interest income over 3 years. Carrying amount given, no need to compute. So, instead na cash, anong na-receive? Promissory note. Long term with unrealistic rate. So, present value of the consideration receivable, okay, less the carrying amount. So, the difference, gain on sale. Okay, number 8, bravo. Okay, number 9. Interest income. Again, paano nga kino-compute? Previous CA times effective rate. Kaya lang, ang question 2021. Kung 2020 sana, ito yung basis. Simply times 10%. Kaya lang, dahil 2021, ang kailangan natin dyan, carrying amount as of December 31, 2020. So first, let's get the CA, 12/31/20, the basis of interest in 2021. Okay, using our shortcut, as of December 31, 2020, itong 460 na ito collected already. Kaya at as of this date, ito na lang yung cash flows, 440 and 420. Get the present value. That's the carrying amount. Kaya lang, because of the passage of time, hindi na 2 and 3 years ito. So yung 440 to be collected after 1 year. Kaya ang gagamitin natin, 1 period. Itong 420 after 2 years. 2 periods. Get the present value as of this date. So 440 times the factor, 1 period. 420,000 times the factor, 2 periods. Okay? The total present value, that's the CA. Carrying amount. And that's the basis of interest 2021. Okay? So, previous CA times effective rate. Okay? So, answer. So, again huwag kakalimutan yung very important concept. Okay? If the FA or FL is at AC, yung carrying amount niyan, present value of cash flows. Discounted using the original effective rate. Okay? Now, paano kung hindi binigay yung effective rate? Paano ba yun kino-compute? Yan ang i-discuss natin after a short break.